so like I said, most of our work is going to come in figuring out what this number is. What is our taxable income? Now this looks like it's pretty simple. We're just going to take our income minus our deductions to get to our taxable income. But I got to tell you something. They call this a simplified formula for a reason, because it's very simple. It's more complex than that, but we're going to start out slow. Generally speaking, so this is how the calculation works in general terms. We start with our total income. Total, and could be from various sources, total income. So if you have two individuals who each get a W-2, they both have W-2 income, total income is going to be the amount that's combined of those two. One spouse is $50,000, one spouse is $40,000, that total income is going to be $90,000. Okay? So we start with our total income, and then we get to subtract some deductions from our income. Chapter 4, we're going to start talking about what some of those deductions are from our income. These are all deductions that are allowed per the tax code. Okay, Chapter 5, we also talk about some different types of deductions. So there are a couple of different types of deductions that we're going to talk about. When we get to Chapter 2, we're going to see a more complex tax formula where it will separate out those different deductions. So, but in general, we start with our income, and then we subtract our permitted deductions to get to our taxable income. So we can presume here with this $270,000, this wasn't their total income. This was their taxable income. Their total income was some amount higher than that, right? It's going to be some amount. It's because they probably had some deductions that were subtracted from it. We arrive at our taxable income, then we multiply by our applicable tax rates. That's what we did here. We multiplied to figure out what that tax liability is. How much tax do they owe for the year? It doesn't mean they're going to have to write a check for $50,885 though, because we know, having gone through payroll accounting, that they've had amounts withheld from their paychecks. They've already prepaid a bunch of tax. At least we hope they have, right? So we subtract all the amounts that they've already paid. That would be withholding, or any amounts that they paid in directly. They paid in directly, not indirectly. So if they made some estimated payments throughout the year, so they actually directly paid the IRS some amounts, or if they had amounts from the previous year, maybe they had a refund from the last year that they told the IRS to just keep, so that would be an amount that was already prepaid. So we're going to subtract any amounts that have already been paid from this $50,885, and it could, like I said, it could come in different forms, withholding or estimated payments or amounts that were paid, refunds that they kept last year. And we're also going to subtract some tax credits if they're entitled to them. Tax credits are different from deductions. Deductions will reduce income. You subtract it from the income. Credits, you subtract it from the tax. So with the deductions, we're going to do that before we figure out what our tax liability is. But for credits, which Chapter 10, we're going to go into detail with what credits there are. Credits are going to directly reduce our tax. Okay? So they act like prepayments. It's as though you made a payment. Okay? And so that's going to reduce our tax liability. What we get at the end is either a tax refund if we already paid, if our prepayments and credits were more than what we owe, then we're going to get a refund. If our prepayments and credits were not more than what we owe, we're going to owe more money. Okay? Then we're going to arrive at our tax due. This simple formula, if you can get this down, and then in chapter 2, it's a little bit more expanded formula, you can reference this to kind of remember where do things go. Like, oh, I have this deduction here. Okay, I know that I need to subtract that before I get to my taxable income because it's up here, right? I'm not going to subtract it down here because it's a deduction. So this can help you as a guide when you're getting started, okay, to figure out where things go. Also, and you'll see this because I'm going to go through the tax return, this follows the format of the tax return. You'll see that on the when we go through line by line on that 1040. Right now, is when you look at a 1040 and you're like, it's all gobbledygook, I can't make heads or tails of it. There's actually a formula to it, and it follows this formula here. All right, questions about that simplified tax formula? We're going to take a look at the tax return.